Money Morning Live. You just hung out with Nick Black and Brandon talking about cryptocurrencies. We have another guy that talks about cryptocurrencies as well. That's Tom Gentile. And although that is not going to be the topic of today, we're going to be hanging out with him here in the main room for the next 30 minutes. Let's bring this man in 5, 4, 3, 2.
Hey guys, Tom Gentile. Welcome to Tuesday and what I like to call Stock Options Tuesday or Options Pattern Tuesday. We're going to dive into options trading, volatility, and how my friend Brutus helps us find the best options to trade. And I think I have about a half a dozen to look at before we end the half-hour show. So let's get right to it. Eric, how you doing today?
I'm doing great, Tom. I like this new, faster format. I feel like we're getting so much information really quickly, not wasting any time, not talking about too much casual, just giving ways to make money.
I only hope that everybody can keep up. I try to slow it down, and over the next couple of days, maybe even the next couple of weeks, I'll figure out the flow, and then I'll know just how much I wanted to talk about during that half-hour show. So before we get into Options Tuesday, take a look at this chart. I mentioned this yesterday. This is Autozone. Get in the zone, Autozone. And boy, we got the best breakout. I mentioned yesterday. Here's the year-to-date chart. Here's where we started the year, 2100. We tagged this 1750 area a couple of times here in March and in June. Back up to 2100. 2100 has gone from a resistance level to a support level. This was a quantum trade, folks. All right. Expensive one, but one nonetheless. And the big breakout, and we were talking about this, that we get out here above 2250. That's exactly what happened yesterday. Here's your yesterday. That 2250 was the low. We jumped up above 2275. Look at this move we got today going on, up 2.5%. I'm in this again. I like to have skin in the game. I like to if I'm putting something out there to you, I give you a head start. I jump in, and this one's been doing pretty well. And again, like I said, it's an expensive trade. Big question you're probably thinking about right now is, where's it going? All right, up 2.5% today. Let me tell you this. When I see a stock like this make a jump like it's doing today, I think it's up like 65 points. If this thing jumps to 2,400 by the end of the week, I got to take half of it off. I got to sell half the shares. And but 2,500, 2,490, 2,500, that's my target. That's my summer target for AZO. And like I mentioned just before, it was a quantum pick, not the cheapest, but our members get the picks with option trades, with more option trades. This one, I tried to look at an option trade. It just wasn't happening, folks. All right. The options are not as liquid as I like. And so I looked at it and said, I'm buying the stock. So anyway, if you want our best quantum picks, numbers on the screen, and you can call that number to find out more and how to join. Now, let's go ahead and jump forward and let's talk about options. And I want to start off our option trades by talking about what's cheap and what's expensive. Now, a couple of names showed up this morning for me, and I want to share those companies, those stock names, and I want to talk about what's cheap and expensive. So the first one on the screen is Bed Bath & Beyond. This has become a meme. It is decadent. It is a dessert in the meme world. I'm not even quite sure why they're pushing this, but I wasn't sure why they were pushing GameStop last year or AMC. They're pushing it. And so this stock, if you take a look at it, again, I'm going back to November of last year, and we were talking about 26.30. It hit a high of 30 back in March. It came and tried to retest that, got as high as about 28, 29, and then fell apart. Earnings, all right, lower than expected in January, lower than expected in April, lower than expected in July. Yeah, it's missing, and yet this thing came down to below $5 and double bottomed at $5 both at the beginning and the end of July, and it's been on a rampage, and it's gone up. It was $16 a little bit earlier this morning. So when I look at this, I got to think, wow. Let's pull the latest on that one so I can share that with you, and you can see here again we're looking at something that is it's trading just around the $16 mark. That is perfectly fine. If I would run over here and get a real-time quote on BBBY, let's see what that's telling us. Wow, what is going on, Eric?
What's that, Tom?
Man, the difference between what was going on maybe an hour ago and now is it's scary.
Things change minute to minute, Tom. I mean, you know this. So let's go through what's happening right now versus what you saw an hour ago.
And so let me bring up the real-time chart on this one. And I want to talk about the real-time chart with Bed Bath & Beyond. And so here it is. Look what's going on. These memers. I mean, there were some folks in here. You know, I was looking at in one of the chat rooms, the day trading rooms, and they were like, "Oh, short it, short it, short it," and it ran up. And you know, this is a year to date. Let's just look at the daily chart on this one for the day. You can see, you know, it. You're looking at you know what was going on this morning, 15, 16, 17, and they were trying to short this thing after the first half hour, and I mean, it ran as high as 27.50. I think it's a little bit overdone. I think, and I also believe, guys, this is not the small meme traders playing these games with these stocks anymore. There are hedge funds now that have learned this game, and they're going to push it both ways. That's what I believe is happening here, because you don't get 3 million shares every minute of the day. You know, when you're looking at what's going on here, just between 11:30 and almost 12 o'clock, we were topping 3 million shares a minute on this stock. You don't get that with meme traders. There's got to be some larger actions going on in here. Now, is this stock cheap or expensive? Well, it's a lot more expensive now than it was this morning. The stock's doubled in value in just the last day. All right. But I want to look at another stock, and I want to talk about what I look at as far as cheap or expensive. If we're looking at, say, Bed Bath & Beyond, $26 a share, that might be expensive. Take a look at Keurig Dr. Pepper. Keurig Dr. Pepper is a $39 stock, $40 stock, and it is on the high side of what's been going on for the year. All right, it's got new year-to-date highs happening. It has mixed earnings reports. So that's something to take a look at too. All right, but what is cheap and expensive? Cheap and expensive could be, you know, I mean, you take a look at, for instance, this is Bed Bath & Beyond, expensive unto itself. When you take a look at it versus an Autozone at $2,350 a share, I mean, you know, when I bring this up, a lot of people look at that and they get a little bit of deja vu, and they think Amazon, they think Google, because, you know, why would a auto parts store have a stock price at $2,350, $2,350 per share? And the thing is that it has been slowly climbing up like this over the past couple of years. Here's the thing. Yes, AutoZone as a stock looks expensive when you compare it to a Bed Bath & Beyond. But I want to look at this a different way. I want to look at a different comparison that we have happening here. And I'm going to try this one more time with KDP, see if we can get KDP to pop up. Here, I'll just move to the other side. Here's what we call our morning report. All right. This is a different way of looking at stocks and looking at whether they're cheap and expensive as an option trader. So when you take a look at a Bed Bath & Beyond, look at the implied volatility that was coming in. This is where option traders look at the greed and the fear of this underlying stock, and they price the options accordingly. Now, what we see is I have a greed fear index, and I have what's called high IV, low IV, and current IV. And when the high IV is at 281, and by the way, take a look at that. And I want to show you something else here. Let's just pop in the VIX, all right? Or how about the VXX? Yeah, let's look at the Vix Futures, all right? Vix Futures are trading at 2125. This is the volatility index for the S&P 500, okay? So when you see Bed Bath & Beyond's VIX, because that's what we're going to call it, at 281, is it safe to say that it's trading 10 times the volatility of the average of the volatility for the VXX, which is the S&P 500 as a total? Yes, that makes this stock, this $26 stock, expensive in the eyeballs of option traders. See, option traders not just look at what's going on with the stock currently, but they're giving you a perception of what's likely to happen. I looked at Bed Bath and Beyond this morning, and I was trying to sell some premium, and I thought to myself, well, the earnings aren't coming out anytime soon. They just came out recently. Why is the implied volatility? Why is this thing at a 281 right now, and we're nowhere near the next earnings cycle? Because the meme traders are pushing this all over the place. Hedge funds are pushing this all over the place. Large specs are pushing it all over the place. And option traders are getting nervous. And those call and put options are bumping up in value. They're very expensive. My top 10 list of expensive options right now look like this. Bed Bath & Beyond, absolutely number one, right? Now, I have TGT Target coming in as number two, where it had a range. The expensive range is 55.03. That's the highest we've seen in a year. The lowest we've seen is 18.91. Currently at 55.03, expensive. Peloton, 168 volatility, meaning very, 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 very dicey, moving around like crazy. Option traders are thinking that in the future, this is going to be even more volatile. When you have a 168 on the high side and 49 on the low, and 128 is the current, guess what? It's very, very close to those one-year highs in option premium. That's what this is, guys. Expensive IV. I want you to think of this as expensive option premium. All right. Walmart's up there too. 34.08, 14.79, currently at 31.08. This is expensive. And you got Ross Stores on here. You've got Dollar Tree on here. You've got a lot of these stocks are retail stocks. You know why most of these are on here? Because their earnings reports are coming out really soon. And once that unknown becomes known, then you'll see all of these stocks come off this list. Now, let's just take a look at the right-hand side for a few minutes. These on the right-hand side are the cheap implied volatility. That means the option prices are cheap relative to where they've been. For instance, OLN, all right, had a high option volatility high of nearly 81. The low was 36.63. Guess what? That's the current. OLN is currently on its low side of implied volatility right now. So if you like OLN as a bull, then call options might be the way to go. If you like it as a bear, then put options might be the way to go. This particular chart does not tell you the direction of the stock. It tells you whether the options are worth buying or worth selling. This side is the sell side. This side is the buy side. What it will not do is it will not give you direction. It gives us range. All right. So if I'm looking at OLN or I'm looking at CINF, cheap options. Lucid, believe it or not, cheap. Well, they're a little bit expensive, but they're nowhere near where they were just recently because right before their earnings announcement, these options were trading at 141% implied volatility. They're now down to 72.43. So to put that into terms that you and I can understand, recently, Lucid options were twice as expensive as they are now, right? CLF, 82 to 50, current 51. On the low side, the cheapest it's been all year. Look at U.S. Steel, 84, 49, 51, very close to the bottom. All right. Keurig is on here. I just mentioned that one. Keurig Dr. Pepper had a high of 30 and a low of 16 and currently trading just above 17. Vicky's on here. Moderna's on here. WBA. And we round that out with D. All right. Dominion. All of these on the right. If you have a reason that you want to be long or short that stock, call options or put options. Buy as a buyer, make the most sense. On the left-hand side, I'm trying to figure out a way to sell these. Maybe I'm selling with something like iron condors. It's a way of creating a long and short position around the current stock price, looking for a drop in these option premiums to occur. Maybe if it's more of a long-term trade, like if I'm looking at Target and I'm thinking, all right, Target really got hit hard last quarter. Maybe they are figuring out a way to fix their problems. Maybe long-term put selling as a way of owning that stock might be the right thing to do. Okay, so I'm just throwing that out there for you folks. But that is what we call cheap and expensive options. And, you know, the big question that you should have on your mind right now is, well, does cheap mean it's as low as it's going to go? Does expensive mean it's as high as it's going to go? And the answer is no to both questions. The real option trader looks at these and looks for patterns where they see cheap getting more expensive and they see expensive getting cheap, right? And the area that we have found where we can look at and data mine for those events are what we call trigger events, right? So trigger events tell us when the best time to buy OLN is if we see a volatility surge, or the best time to sell BBBY. I can tell you right now, there is no time to sell BBBY right now because we don't have a trigger event. Not anytime soon. Target's got a trigger event. Peloton's got a trigger event. Walmart's got a trigger event. Ross Stores, Dollar Tree, they all have trigger events. And their trigger events are earnings coming up soon. But you look at Bed Bath & Beyond, which is the highest, most expensive volatility you can see right now. That one to me is a stay out of the way. Stay out of the way. Let the people that need that excitement, that need that greed, let them step in there, all right, and fight that battle. I'm going to hold back. I'm going to be the second regiment on that, all right? I will be next in line, but only if there's a reason to trade Bed Bath & Beyond. Now, if you're a day trader, you probably got to love this. Love it, all right? I'm not a day trader. I am a pattern trader. I am what I like to call a position pattern trader. I need overnight events to happen. Okay? I'll give you an example. Yesterday, AZO, when I looked at AutoZone, hey, it was a buy yesterday. It went up, what? A couple $100 for me. The big moves today, thousands of dollars in the move today. I would not have got that if I were a day trader, right? Because I would have gone in, got out, moved on. I might have missed that move. So I find some of the biggest position moves do not happen as a day trader. They happen overnight. They happen in the overnight markets. Okay, so back to Brutus. And so I want to talk about Brutus and how we find these patterns with Brutus. And so I call this Brutus terminology. And Brutus terminology is a way of looking at all the points that our computer goes through and finds these potential opportunities. So what Brutus does is it goes back and scans. It scans years of data. And we're looking for a couple things. We're looking for an initiation point. When is the best place, the best time frame, all right, where Brutus is identified as we're heading into a trigger trade to buy before the surge? That's when the surge starts, the initiation point. When is the termination point? When do we got to get out of the trade, win, lose, or draw? That termination point is almost always right before an earnings report. The surge magnitude, what Brutus does is goes back and it scans, all right? It will scan again and again and again. It'll scan target and it'll see, does target have a pattern going up? Does target have a pattern going down? And more importantly, does target have a pattern of volatility surge coming into options? And what is that magnitude? What is that average expectation of volatility increase? All right. The only other things we like to Brutus to look for is ROI projections on the options and what does the historical accuracy look like as we're moving forward. Okay. Now, what do we do with Brutus? Well, I will look at 3 types of trades and 3 trades only with Brutus because this is a buying strategy, option buying strategy. So my option trades look like this: buy calls, buy puts, or buy straddles. I buy calls if, again, one thing has to happen on all of these, and that is that options volatility, we have to see that surging. But if we also see price surging upwards, then we'll look at call option trades. If we see volatility going up and price going down into a trigger event, then we might elect to take a put option trade. And if we see option volatility surging, but we're seeing a lot of movement in the stock, but not directional, then we might put on a straddle. And a straddle is basically you're buying the call and the put together at the same strike price, using the same expiration date on the same asset. I find that a low risk or fixed risk way to profit regardless of what direction the market ends up going. Sometimes the straddle will break one way or another, and we'll make more money on one option than we'll lose on the other. Okay, that happens. That will happen. Let's take a look at Rivian, for instance. So just last month, we had a Brutus signal on Rivian. We had a signal on Rivian a couple months ago to the downside, and we profited very handsomely on that down move. And if you look, we're seeing that target happening, but the down move is happening less and less. So Brutus signaled and said, hey, the one thing that does continue to happen is you see those big peaks on those red lines, Eric?
I do.
Those big peaks. That's option. That's the option premium. Surge, big surge to the left-hand side. Big surge to the right next to my head before it drops back down. Right? We want to get in front of that surge. And what we're noticing is that with a lot of the electric, the EV stocks, is that they just got hammered quarter after quarter. And now it's an area where Brutus is saying, I don't know how much we can get to the downside. But look at the volatility it comes in on these because everybody's interested in them. What about a straddle? And so what about a straddle was it? And so we looked at the Rivian straddle. Put the Rivian straddle up, Eric, so I can make sure I explain this to everybody. So we were buying the August 12th, 33 calls, and at the exact same time. In fact, it was actually on the exact same ticket. You buy to open the Rivian August 12th, 33 put. Okay. So what do you have here? You have a call and a put, same strike price, same expiration date, and we're paying that no more than 630. That's for the price of the call and the put combined. That was a day only order that ended up making 15%, 15.5% in about 3 weeks. So we sat on this trade for 3 weeks, Eric, and the grass grew on Rivian, meaning the call and the put combined increased in value before the earnings report came out. Okay, it's important to know that, guys, before the earnings report came out. In fact, we're coming into August. So we're coming into that second half of the sweet spot. We're starting to see earnings come off now. There are not as many of them coming out. All right, we're going to see a lot of retailers. We're going to see the retailers, the Targets, the Pelotons, the Walmarts, the Dollar Trees. They're all going to announce. Now, are there Brutus trades on these? Maybe, maybe not. I'm going to show you the list that I'm looking at that have at least a 75% pattern of accuracy. All right. And I'm going to show you the calls and the puts. I'm not going to show you the straddles. I'll show you the call and put trades, that what we call that first pass. But here's the thing with the straddle, we put it on together. Sometimes we take it off together. Sometimes if the thing runs really hard in one direction, it might make sense just to take off the profitable leg and let the other ride as a lottery ticket. You never know. You never know. So, by the way, back half of August, Eric, we got 100% winners. Our closed positions, all of our campaigns, when we're going through and Brutus is picking these trades from open to close for August, all profitable.
I love that. So, you know who else loves that? All the members that are engaging and being part of your services, getting in on these. I'm sure they're pretty excited about it as well. It's good to hear.
Guys, and let me make something really clear. We're not 100% accurate. All right, we take losses. I don't know a trader. I don't know a professional trader out there that does not take losses. All right, I take them. I take them all the time. I take them as part of my strategy. My strategy says get out. I get out. Okay. So this one, and we're getting into the back half of this earnings season, looking really, really good. You might think 15.7%. That might not be a whole lot, but I can tell you it outdid what the Rivian traders, what the folks in Rivian have been dealing with for the year. We're on it in 3 weeks. We're in it for 3 weeks. We didn't care what direction was going in, and it handed us a nice double-digit return without market direction. This was one example of how Brutus is finding these best option trades, and I just set it up to show you exactly what we're talking about. We talk about are we looking for the cheapest options out there? No, we're not. But we're also not looking for the most expensive. What we're looking for are options that are on the move. All of a sudden, everybody's jumping in for one reason or another. We want to already be in. We want to be in before the crowd. We want to be out before the crowd. So that's what we're doing, folks. All right. Now, as we turn the last 5 minutes of the program, I want to share with you what we're looking at with Brutus. And while this is not everything, definitely giving you the stocks here. I got a half a dozen of them here for you. And let's talk about these. So Salesforce has come up on the screen. Salesforce, and these are as of this morning. Yesterday's close was 188.18. We have a earnings date on this. This is happening next week. All right, the 24th. Now, Brutus has found a 75% pattern on this one, where we're seeing that IV change. See where it says average IV change? That's positive. All right, that means that we see a lot of people coming into Salesforce. Why? Because mainstream media can't get enough of talking about Salesforce before they actually come out with their numbers. And that pushes volatility up, that pushes option premiums up, and we're seeing that with even the theta goes up slightly. Now, what's the return on investment been like? 50%. I mean, you know what? I'd love to get a chance of getting a 50% trade before the earnings event comes out. Splunk, if you take a look at Splunk's $112 stock, also has earnings on the 24th, a 75% winner. And when I look all the way over to the right where it says average return on investment, that ROI percentage, average return, and this is including the losers. All right, these are not the average return of the winners. This is the average return all the way across, 64%. Affirm has a earnings date of 8/25. It has a 75% success rate, 87%. All right, 87% there for Affirm Holdings. Jinko Solar Holding. Right, so Jinko came up. A lot of you probably don't even know what Jinko Solar Holding is. I'm sure after I said the word solar in Jinko Solar, you're like, yeah, I know what they do. Do you know they got an earnings report on the 25th of August? Do you know that 3 out of the last 4 trades have seen a 40 winners with an average return of 41%? Ambarella, $91 stock. Their earnings are coming out at the end of the month, 8/30, 75% accuracy, 42% average return on investment. And then I end with what I think is the best is last, Oracle. So let me tell you about Oracle. Now, Oracle's not coming out till September, so this one, these are all kind of in the headlights. It's the first pass. We want to dial in. We want Brutus to dial in and give us those best entry days, those best exit days. And oh yeah, by the way, are these bullish? Are these bearish? That's for you to find out. All right. Our members will know whether they're bullish or bearish. Our members will know which ones we decide to go after and which ones we decide to drop based on more advanced scanning that we do with Brutus. If you want these, you want to sign up for this, then what you're looking for is Operation Surge Strike, because that's exactly what we do here. We are playing the pre-earnings market. That's basically what we're doing. Oracle, by the way, 100%. We have a 100% pattern on Oracle right now that has returned on average 106%. So out of all 6 of these, Oracle's looking really good. And I can tell you, surge strikers in the room, you members, we're probably going to be looking at an Oracle trade if I were to pick one of all of these that you see here. All right. So, like I said, I'm showing everybody in the room what we're looking at. Go out and do some homework. Take a look at these patterns. See if anything makes sense to you. If you're an Operation Surge Strike, you're going to see what makes sense to us. And we make sure to send out the alerts to you for every single trade that we decide to do so you don't miss a thing. Eric, if you don't have the link up, pop that link up, pop the phone number in the screen as well if anyone has any questions on Brutus. Okay? So, as I am closing out today's session, let me just tell you what else we got going on. Those of you that are part of Operation Surge Strike, join us in about a half hour. Mr. Mastermind himself, Mike Wade, will be with us, and we will be talking about our recent close positions, our perfect close trades in August, what we have open, and what we see coming down the pike as far as new surge strikes. Otherwise, everybody else, I'll be back here again, same time tomorrow, and we'll see you then. Bye now.